Welcome, ADK Wealth Advisory Group and Financial Planning World Community. Talking with you today in March 2023. Our market update is really going to focus on three things: the economy, financial markets, and the banking sector. So the economy is fairly interesting. A Wall Street Journal article last week commented about the recession that's always 6 months out. I think that sums it up, is that each time you're reading data, it's so mixed and things are slowing at such a pace that one would say that this recession may not even come to register as a recession. It might just be an economic slowdown that, is more of a pause. Time will tell, but our assessment is probably it doesn't register as a recession, and the pinnacle of the slowdown is coming soon. Whether that window is like April to July of 23 is the pinnacle of the slow, and then we start to ratchet back up. Some of that will really depend on inflation and what the Fed has to continue to do. That's a real big unknown. The market's pricing in 3 more moves, one being 0.5%, and the other 2 being 0.25%. I don't think the Fed's very likely to raise 0.5% this next time coming up, because it would make them look a little stupid that they only raised 0.25 in the beginning of 23 and then they do 0.5. I think they'll do another 0.5 and then sort of play out the data to see how it goes. My thesis on inflation at large is that in the late 90s, the offshoring to China, and China becoming this sort of one-stop shop for manufacturing galore, and not just, stupid bobblehead type stuff, but really heavy duty A to Z. I think that was the big macro trend that pushed inflation super, super low. And now we see corporate America, Europe, et cetera, starting to diversify their supply chains because of the geopolitical risks that Xi and his dictatorship is forcing hands on. I think you're also seeing some other inflationary trends like immigration policies, coupled with the fact that we have 10,000 Americans turning age 65 every day. And by 2030, all the boomers will be over age 65. So I think that we've ended an extended period of super low inflation, and that we'll have an inflationary period that's going to pitch the Fed fits for a while. That said, I don't think that stagflation is what we're facing, because if you think of the definition of stagflation, it means an economy that's shrinking, not just a recession, but a real recessionary extension, and then inflation. And that's fairly unlikely in this coming period that we're in. On a positive note, you take a look at China opening. That has a big impact on the global economy. And the big unknown was, how is the winter going to be in Europe? And what would that mean to their economy and the energy stuff because of the war with Russia? And the long and short of it is they've been fortunate to have a very mild winter. Winter is approaching its end. Never know exactly when it's over, but you could say that they dodged a serious bullet. And so economically, I think you could summarize it all by saying not as bad as what people were fearing, and recovering to a degree globally because of China. Financial markets, that's one that if you take a look at the bond market last year was the worst year since the U.S. Ag Index started in the 70s. So to say something's the worst year since the 70s, that's pretty bad. Probably takes 3 years, maybe even 4, for that to totally recover the damage. I think this year, second half of this year to the first half of next year, you'll see the bond market rebound quite a bit. Hard to say what's going to happen over the next several months, because you just don't know what the inflation data is going to be. Stock market, that's a head scratcher. The key question is are we in a recovery? Or is this just an extension of a sideways market that started in June of 2022? The next couple months will play that out. If it is a recovery, then we're probably back to beginning of 2022 levels by the end of this year. Investing always involves risk, so we don't know, is it probably, or is it more really the sideways market? And then if it's a sideways market, will we test last year's lows, or will it just kind of consolidate where we're at right now around this 200-day moving average. I think that the next topic is a big part of that, and that is what's going on with the regional banks. Let's first start with the big banks. The big banks are in really good shape financially from a balance sheet standpoint. Regional banks have never been in as good a shape as the big banks post-collapse when a lot of the regs had to change. Now, that doesn't mean all regional banks, but the Silicon Valley Bank, the collapse that occurred there really is a bigger thematic issue. In 2019, you probably remember when we were talking about what we thought the recession and the risk were for 2020. One of those was around venture capital, unicorns, basically the big private money, private equity dollars. It used to be, in order for a new business to garner capital to go to that huge next level, you had to do an IPO, an initial public offering. That doesn't need to happen anymore because you've got all this big money on the sidelines that floats in, and that's exactly what we said was a big risk to the economy that's hard to measure because it's very opaque, and now we're seeing that. So what's it mean? The answer is really no one knows, because the amount of money that's gone into private venture from this sector is staggering. It makes it look like a tiny drop in the bucket of what happened in 2000 relative to the amount of money that was going into the dot-com boom. But will it be a bust, or will it just be something that is irritated by all this? No one knows, and really there's no way to know. I do think that there's other banks that are going to have problems at the regional level that are tied to this sector. And I do think that the FDIC needs to bail them out. I don't like the fact that the big money bailouts happen, because in the end, I don't think the people who made the really bad decisions get punished nearly enough. I think there should be a profit clawback, but that's a whole nother video. So in the end, the banks are in good shape, the big banks, the Bank of America, the Goldmans, et cetera. The regional banks are at risk of trembling. They'll be bailed out. They'll continue to be bailed out. Will it cause us to test lows? Will it just be a consolidation? Are we in a recovery? The next few months will really tell that. So in conclusion, if you take a look at the economy, I think that it's reasonable to say that if we have a recession, it'll be mild, and there's a good chance it won't even register as a recession. Bond market takes a while to recover. Stock market will also take a while, but probably significantly less time. And the banking scenario is still left to play out, but the big banks are in good shape. Regional banks will get bailed out, and it will be a problem. So just in saying thank you for your time, thank you for the trust that you place in our team. We really, really appreciate that. As I think about January of 23 marking 35 years that I've been doing this, and February marking the 25-year mark that we have been independent, and we've been serving you in a way that helps our families help each other. Just thanks a lot for the success that you've helped me have with my family. If there's anything you need relative to an appointment, just reach out to Sam, Rich, Justin, or Scotty to get something on the books. Thank you very much for your time, and have a great rest of the day.